Today we will discuss the concept of public goods entrepreneurship and the opportunities in this space. So let's start to define what it is and why it's interesting and important. In economics, there are two interesting criteria to classify goods. So the first criteria is rivalry. A good is rival if consumed by one user, it is no longer available to others, like a cup of coffee. The second criteria is excludability. A good is excludable if the producer can individually manage access for every consumer to access, like, say, a movie theater. And it's not excludable if it's like city fireworks. When it's done, everyone has an easy and unrestricted access. So based on these two criteria, we can classify all goods in four categories. The first category is the standard private goods, so the ones that are excludable and rival. Things like coffee, food, housing, this type of things. Cars. The second category would be non-rival but excludable. So this is called club goods, and the examples would be something like copyrighted software like Photoshop or Windows 7 or cable television. So this type of things, usage by one user doesn't affect the other, but the access is individually managed. The third category would be the opposite of that. So when it's rival, so usage by one is reducing the quantity, but it's really common access. So the example can be like conference rooms in an office building. So everyone can book a room, but the total number of rooms is limited. Or customer service. So anyone can call Zappos for help, but they have only a limited amount of people answering the calls. And finally, we arrive at the fourth category, the subject of today's discussion, which is public goods. So public goods are non-rival and non-excludable. So like fireworks in the city, once done, it's free for everyone, and it can be in parallel consumed by everyone. So another examples would be national defense, most type of roads except toll roads, and GPS satellites. GPS satellites are free for use for everyone, and Wikipedia. Okay, so this is public goods, and they exist in many areas like education, energy, healthcare, environment, transportation, tourism, promotion, campaigns, all type of things. Actually, anything that government does is typically close to public goods. So I see that there is a big growing demand for public goods for a number of reasons. First, we have more foundations nowadays. If you look for things like Giving Pledge, the movement by Warren Buffett and Bill Gates, urging rich people to donate half of their money to charitable purposes. That's one source of money. Another source is the developing countries become richer, and their needs are shifting from the basic needs like shelter and food to more advanced needs where they need all kinds of infrastructure. So another source is socialist countries and also authoritarian countries. In these countries, the government controls a large proportion of GDP, so the government typically spends money on public goods. And all these reasons tell us there is a big opportunity for entrepreneurship and for making money in this area. And so today we will talk about public goods enterprise, the for-profit entrepreneurial approach to producing public goods. Okay, so before going any further, let's compare this concept to other notions that people typically have in mind in this area. So let's start with non-profit. Non-profit is just any entity that doesn't distribute revenue back to shareholders. So it doesn't say anything about what does it do. It just doesn't give money back to the owners. That's it. So the second concept is charity, or charitable organization. This is a specific subclass of all nonprofits that has some good causes, supporting good causes or working on some good purpose. Things like education or housing for, and it's typically, not always, but typically offers help to those who cannot provide help to themselves. So, okay, let's move on. So the next thing is social entrepreneurship. Social entrepreneurship is an entrepreneurial approach to social change and to sustainable change. And sustainable approach, so the way you make a change is that once it's done, or the way how you do it, you don't want forever ask for money and for help. You want the change that will stay by itself. And finally, there is this new exciting concept of emergent ventures, which is a subclass of social entrepreneurship that is technology-based and medium or small size, and is typically on focused on enrichment needs. So not the basic stuff that charity typically works, but something more advanced like community or knowledge, education, this type of things. Okay, so how all these things compare to public goods enterprise? Well, public goods define just the outcome. It just does not define much about who does that. So we have a market of public goods, anything that is non-excludable and non-rival. And anyone can be a participant of this market. So it can be non-profit, it can be charitable organization that produces public goods, it can be social entrepreneur, it can be emergent venture, and it can be a typical for-profit corporation. Like if you look at the Google, then Google search is a public good. Anyone can use it, no limits, no restriction. So it's not excluded and it's non-rival, and it's produced by for-profit commercial company. Okay, great. So now we have the clarity that the public goods is just the market, and anyone in this market is public good enterprise. Okay, so what's the most common question about, let's go to the public goods. So the most common question is how you make money, because if you have a good that is free for everyone and it can be consumed in parallel, then everyone is happy to get it free, and we have a free rider problem. So when everyone thinks, okay, great, so why not other people will pay for this road in our city and clean everything up, because they will benefit from that, so I'll get it for free. It's like, okay, go ahead, build the subway in our city, and I will happily to find my way to get a free ride. So if everyone would think this way, then of course we get the lack of public goods. There is no incentive to produce them anyway. So we need some business models to finance that. So we need to resolve two questions. The first question is how we find the funding for startup costs and for research and development. So investment capital, in other words. So there are several ways to find investment to public goods. The first one is a classic venture capital industry. And there is a good news that there are certain VC firms that have a specific focus on public goods. Good Capital, Omidyar Network, and Unreasonable Institute are three known examples. So the second approach is get money from either government or foundations, charitable foundations. The third approach is, instead of investment, ask for loans, and here we have this huge high-profile case of Tesla Motors, who received over $400 million credit guarantee from US government for electric cars factory. And okay, so that's about it. So there were several good ways to get started money. So the more important question is how you repeatedly produce public goods who will pay for production and operating costs? So for that, there are three groups of business models. The first group is direct money coming from the future users. So the typical way to get money is pledge-based mechanism. In a nutshell, you ask users to commit to pay you if you would produce a good. So you say, hey guys, I have this good idea, I don't know, it would be a crazy open knowledge, I'm going to publish a lot of good advice, good for anyone, like, I don't know, tax advice, but I need just some money to get there. So just promise me any amount of dollars if you want to see the result. And if the total amount of pledges goes above the threshold, above the cost to produce, then you say, okay, I go, and then you produce, and then you charge people money. Otherwise, you return money. And there are good online mechanisms to support this model, and the most famous example is Kickstarter for creative works, but we also have Spotus for journalism, investigative journalism. And, okay, great. So, the second group of business models is to have a proxy organization. So all future users of a public good put money in a common pool. It can be a government, it can be a foundation for a certain cause, like Cancer Foundation, or it can be homeowners association, it can be professional association. And then these people delegate, or individual participants of the market, they delegate the decision power to this proxy organization to spend budget on a certain public goods. And then this organization in turn will procure the production of public goods. And finally, the third business model for producing public goods is auxiliary secondary products that are sold for profit and that are subsidizing the creation of public goods. And here we have many, many examples. So, an interesting example is World Wildlife Fund, this fund with a famous panda logo. They actually make money on logo. So they allow commercial companies like credit card companies to issue cards with their logo, and then they get some money back for that, and they can invest this money in actual nature conservancy programs. So the other famous example is Mozilla, that offers Firefox browser for free, but they have this auction for default choice of a search engine. So if Google pays the most money, then the Mozilla will put Google as a first choice search engine, and maybe Yahoo as a second, or Bing as a third, and so on. But say in Russia, they have a separate auction, and there we have a national search engine called Yandex, and they actually paid more money in Russia than Google, and so they got the first spot. Okay, so another example is just either freemium business model where you offer additional services, or ad-supported model where you say, okay, I put some money, but ad-supported model cannot support everything. It cannot support fireworks. It cannot support GPS satellite system. GPS satellite system is one of the prime examples of public goods. It's free for your GPS device to talk to the satellites. They are funded by US government. Another example of a very the complementary product that doesn't come to mind immediately is name rights. So if you produce a public goods, you can sell the rights to name it. And examples here are like soccer stadiums or business schools. Almost all business schools in the US sold their name to one of their richest people in the country, and we have like Sloan School of Management, a Sloan Business School, I guess. Okay, cool. So we have these three business models: the direct money from users, the proxy-based mechanism, the government or foundation, and the complementary goods. Okay, cool. So now let's see what's next. What is limiting our ability to prosper in this new exciting field. So a lot of things has to happen. So the first thing, we need markets. We need an easy and cheap way to sell public goods. Public goods are very hard to sell because you sell to governments, you sell to foundations, and they have very long sales cycles. They trust on the big brand suppliers in many cases, and in some countries there is corruption, kickbacks, all this stuff. So that's one. The second thing that is demand is not transparent, so it's hard to know what the government wants. For example, United States have most of the budget is not online, so you don't even, I mean, some budget is online probably, but the specific, maybe citywide budget, so you don't know where exactly, or even if you know the name of the budget line, you still don't know what exactly they need, and especially in real time. And other countries, of course, some other countries are behind, so in developing countries the budgets are definitely not online, and so it's hard to sell some innovative public goods products to them if you don't know even what they're looking for. So the marketplaces like Kickstarter, Donors Choose, or Splotas is definitely a step in the right direction. Hopefully we'll see more. The second thing I want to see is increase in spending, especially things like corporate social responsibility. I think there is an opportunity to like unify and standardize the way the companies approach that, so we get a bigger, transparent market in how companies spend money for public goods. And the money going up, we have more foundations, we have more people recognize that if they combine their forces, they can make things happen, and so we will see more budget, I guess, in public goods. So the next thing, which is like the sister direction, is reduce costs. So it is known that when public goods are sold to government, they're typically sold at a higher price than the similar stuff is selling for private purposes. So we really need low-cost public goods, and I think there is a huge opportunity because look at Walmart, look at EasyJet and other low-cost airlines. They found a huge new sector. So it would be really fun to see like the low-cost road construction company, the company that will build the high-quality roads for local governments if they need that, for the lowest possible cost, or something like this, because the market is huge. So if this market can be approached by a low-cost company, it would be beneficial for the public to have a low-cost suppliers to governments and foundations. The next thing, and this is the idea coming from Bill Gates' Harvard commencement speech, is we need metrics and measurement systems, because people are ready to give you money for creating public goods only if they would be sure that you made a change, that the money are not wasted, that there is an impact on your contribution. So we need measurements in the areas such as education, environment, and health. So if you say, hey, I made a website and the public health index got 1% up, so you need to support this type of claims, but certain respected and independent metrics. The next thing is we need more funding, of course, and I would love to see more VC firms with a focus on public goods. Then we need a community. We need a connected community, and more specifically, we need a connection between the government spending and technology cluster like Silicon Valley, and between users as well, because Silicon Valley is located in one place and US government is located in another place, and the people in high need who have the biggest demand for, I don't know, education may be located in a third, say, rural areas, or I don't know, retirement communities or whatever. So the end users can be in one place, the spenders are in another place, and the technology sector in the third place. So we need connected things geographically. One approach is just to establish a tech cluster near the government, like building bigger cluster in Washington where, and this is a known story, like governmental contractors in defense, they have large offices in Washington for exactly that reason, because they need to be connected to people who spend money. So a final thing, this I'm not sure will happen, but I love to see it happen, is push private goods company to public goods sector. You see the exciting companies like Apple, and they have enormous talent, enormous technology assets, and they focus on private goods, on these individual boxes you can sell separately. But they have iTunes, which is now becomes a club good, so it's you pay per access, but it's no rival, so the usage of one user is not affected. Yeah, they have iTunes University, which is now public good, and I want to see much more of that. So we want push our biggest corporations, Hewlett Packard, Apple, Sony, to Toyota, to do more stuff in public goods sector. They can. They just afraid to sell to governments. They're afraid to sell to foundations, and they are, by their shareholders, they push to be profit focused. So they can say, okay, we have social responsibility, we just give money away, but other than that, we focus on the stuff we know. But there is a stuff they know that can be applied to public goods, and they're just afraid to sell to government. So if we have one-click sell to government like in Amazon, then it would be a huge move following that easy selling, easy marketplace. It would be a huge move of private goods technology to public goods. Okay, let's summarize. So public goods is an exciting area where you produce non-rival, non-excludable goods. And public goods entrepreneur is someone who wants to make profit on that. And the ways to make profit is either raise money from future users or go to the proxy organizations like governments and funds, or have a strong and compelling complementary products. And it's likely that the spending in public goods will go up, and there is a huge opportunity for startups, for technology innovation, specifically in this area. So I'd love to see a lot of stuff around that. Thanks for listening. Bye.